If the US and Canada were to engage in a trade war, it could have significant economic, political, and social consequences for both countries. Given their deeply integrated economies, the impact would be widespread across industries and could lead to disruptions in global trade. How might the tariff affect Canadian consumers? Canadian consumers would face substantial challenges if the tariff were introduced. Firstly, prices on a wide range of goods are likely to rise significantly. For example, a loaf of bread currently priced at $3.50 could rise to $5 due to increased costs for imported processed agricultural inputs. These steep and sweeping price hikes will strain household budgets and increase debt levels. Energy costs would also see an increase, which will only compound financial pressures. Finally, disruptions in supply chains and market exits could not only leave Canadians with fewer options in various categories but also limit access to essential products, like prescription medications or household goods reliant on U.S. components. Some potential outcomes include 1. Economic consequences. 2. Sector-specific impact. 3. Political tensions. 4. Consumer impact. Now I am going to elaborate all the points one by one. 1. Economic consequences. Canada and the United States share the world's longest land border, which handles daily over $2 billion in trade and the thousands of people who cross it for business or pleasure. Tariffs and trade barriers may cause both countries may impose tariffs on key imports, leading to higher prices for consumers and businesses. Industries such as automotive, agriculture, and energy would be heavily affected. What USA and Canada trades with each other. The United States was again Canada's largest trading partner in 2022, with over $960.9 billion in total trade, on a customs basis, accounting for close to two-thirds, 63.4%, of the more than $1.5 trillion in worldwide trade. Energy products made up one-third, 33.5%, of the $598 billion worth of exports to the United States in 2022. Motor vehicles and parts made up nearly one-fifth, 19.4%, of the $362.9 billion in imports from the United States. The direct investment position from the United States and Canada was $500.7 billion in 2021, accounting for nearly half, 46.9%, of the total direct investment in Canada. Canada's direct investment position in the United States was $744.9 billion, or 47.9% of its total direct investment abroad. Job losses. Companies dependent on cross-border trade could face layoffs due to reduced demand and higher costs. As per the report of Financial Post, almost 5 million jobs are at risk due to this impact. 2. Sector-specific impact. Why American Trump administration causes this? As experts and politicians have long speculated that an incoming Trump administration would use the threat of tariffs as leverage ahead of the 2026 renewal of the Canada-United States-Mexico Agreement, CUSMA, a tactic Trump previously used during the original negotiations in 2018. Due to this, Canada economy is facing huge losses in upcoming years as the automotive industry plays a major role in the North American economy. The automotive sector contributed more than $809 billion to the U.S. economy in 2023 and accounted for 11% of total manufacturing output, according to a report from the U.S. Trade Representative. The agri-food sector in Canada represents about 7% of Canada's GDP and includes agriculture, food manufacturing, food services, as well as wholesale and retail sales of food commodities. Canada's agri-food sector employs about 2.3 million people. Food is one of the top imports of the U.S. from Canada. It's roughly $30 billion a year. It's a big sector. The U.S. imported $614.3 billion CDN worth of goods from Canada in 2022, according to the Office of the United States Trade Representative. More recent figures from the U.S. Census Bureau show that the U.S. imported about $435 billion CDN of Canadian goods between January and September of this year. The U.S. is Canada's best customer when it comes to oil and petroleum. 60% of U.S. crude oil imports were sourced from Canada in 2022, while Mexico was the U.S.'s next most valuable supplier, accounting for just 10% of those imports by comparison. 3. Political tensions. Due to the trade wars between Canada and USA, political tension will cause Canada to look for some alliances. Strained diplomatic relations. A trade war could lead to broader political tensions, affecting cooperation in areas such as defense, immigration, and border security. Retaliatory measures. Canada may seek alliances with other countries, e.g., the EU, China, to offset losses, potentially weakening US-Canada relations. 4. Consumer impact. As per some reports, the USITA said that in 2022, U.S. exports had a 24% market share in Canada when it came to consumer-oriented agricultural products, or products like breakfast cereal that are stocked in supermarkets. According to the Foreign Agricultural Service, part of the U.S. Department of Agriculture, the U.S. exported nearly $2.8 billion United States dollars worth of cereal to Canada in 2023. The United States is by far Canada's largest supplier of beauty products. Canada is the 8th largest importer of beauty products in the world, with an import value of $1.74 billion United States dollars. Of that, beauty products worth $1.19 billion United States dollars are imported from the US, with France in a distant second place, $178 million United States dollars. In 2022, Canada imported $596 million United States dollars worth of fruit juice, most of it, $385 million United States dollars, coming from the US. In 2023. U.S. alcohol exports to Canada amounted to $262 million United States dollars a year, with whiskey alone accounting for $76 million United States dollars. According to the U.S. Foreign Agricultural Service, America's agricultural exports to Canada in 2023 amounted to $28 billion United States dollars. Consumer-oriented products, including fruits and vegetables, meats, dairy, processed food, and beverages, constituted 72% of that trade with a value of $20 billion United States dollars. Seafood exports from the United States to Canada have averaged $1.1 billion United States dollars a year during the past 5 years, according to the U.S. Foreign Agricultural Service. In 2023, Canada imported seafood worth $4.57 billion, according to Fisheries and Oceans Canada. The largest share of this, $1.4 billion, came from the United States. The United States supplied 31% of Canada's seafood imports, while China supplied 12% and Chile 8%. According to the Foreign Agricultural Service, chocolate and cocoa product exports from the U.S. to Canada have grown by 23%, from $713 million United States dollars to $878 million United States dollars over the last 5 years. Confectionery exports are also up 41% to over $447 million United States dollars. Canada also imported jams and jellies worth $64 million from the U.S. What impact would there be on Canadians? The impact of tariffs could vary widely, depending on the product and the market within Canada. Canadian businesses hit with tariffs on U.S. imports at the border may decide to absorb the cost of those tariffs, at least for a while. Other businesses may decide to pass along the cost of the tariff to buyers and end consumers.